And during that time, I was going to real estate meetups, meeting people, talking to people, kind of surveying the land, so to speak, to figure out what I wanted to do. And I saw a lot of people flipping, your common, all the things you see around here, wholesalers. And what I found is that the low hanging fruit, like the basic cosmetic flips, the margins were extremely tight. There was a ton of competition for them. Same thing as here.
Hey everyone, we have Andrew Hines on the show today. Andrew, thanks for being on the show. Just to give you a quick introduction, for those of you who don't know Andrew is a well-known podcast host. He initially started out being in the student rental investment space, but has quickly diversified into lots of different things. And most recently, he is doing a bunch of development work south of the border, which I'll let him tell you more about, I guess, specifically in the Cape Coral area. He also has a really cool campground where they do some awesome glamping experience stuff. So really excited to hear about that. And, Andrew's known to have a lot of great feedback about economics and what's going on here and south of the border. So really excited to pick your brain about that sort of stuff too. So, without further ado, I'll introduce Andrew. And Andrew, maybe you can tell our guests a little bit about yourself.
Yeah, well, thank you for the introduction. Thanks for having me. And you did a good summary there of some of the stuff that I'm up to. And we can dig into any of those topics that you'd like. But you hit the nail on the head. So I started, 2011, a couple of single family homes, quickly ran out of money, diversified into the US, lost more money. And then I finally found my way with student rentals in 2015, got into BRRRR-ing, adding additions. Then all of a sudden I'm, general contracting, building subdivisions of houses and townhouses and stuff. A lot of things I never expected to get into. And then more recently as an investor, buying the campground about a year ago now. And we just finished our first successful season. And of course, the Florida stuff is a big focus right now. I've never been a big fan of forcing numbers to work or a lot of people just get impatient and they pull the trigger even when they know the numbers aren't great because they want to do something. And for me, I was known as people were looking at me like, why aren't you doing anything? And I'm just like, I don't like any of these numbers. So I spent a lot of time finding my markets and finding places where I thought, the outlook was good long-term and the numbers work now. And that's what Florida is for me right now, which we can dig into.
Sure. Yeah. I was going to ask you that, what made you choose Florida and Cape Coral specifically? Was it that you were hanging out during COVID, and then you thought, the economics makes sense over here?
Or did you specifically go there? And was there some sort of driver that led you to that specific area?
Well, people often say invest in what you know, which I definitely agree with, because then you can sell it. So for me, I had spent a lot of time in Southwest Florida. I love Southwest Florida. And so Cape Coral was about 45 minutes to an hour from Naples, where we usually stay. So when we were down there in 2021, we went over in January when everything was locked down and it was just, nonsense in Ontario. So we decided, hey, we're getting out of here. We're going to go down to Florida where it's fully open and we can kind of live normally. So my wife and I spent about 3.5 months down there. And during that time, I was going to real estate meetups, meeting people, talking to people, kind of surveying the land, so to speak, to figure out what I wanted to do. And I saw a lot of people flipping, your common, all the things you see around here, wholesalers. And what I found is that the low hanging fruit, like the basic cosmetic flips, the margins were extremely tight. There was a ton of competition for them. Same thing as here, and at that time. But for some reason, these new builds, like the margins were much better. They're extremely quick to build and it was like way less effort. So I just started looking at that. I heard a guy speak that was doing this, and he said, hey, I'm looking for JV partners, somebody bring in the first installment and buy the land and I'll take care of the rest. And that's not how we ended up structuring it, but I heard him talk about his margins. I'm like, that sounds great. I'm in. I'm like, we'll do one here. We shook hands. And then I just, we've had a few conversations and ultimately I ended up financing the whole thing and owning it. And he basically introduced me to the general contractor and he's selling it without a commission because he's a realtor. And that was sort of the deal we worked out. He oversees and keeps an eye on it for me. And we're kind of friends now. He just kind of helps me out, looks at my stuff for me. So he's a good contact. And Yeah, and full disclosure, I told him, hey, look, I need to do this on my own, and this is how I'm going to get started, and he was okay with that, and we've kind of grown that way. That I know you had a very simple question, which I gave you a long-winded answer for. So you tell me what you would like me to speak on.
Yeah, so I'm curious. I mean, I know, just maybe walk us through like some high level numbers on an average development that you're doing out there, if you don't mind.
Yeah, and how is it different from?
Yeah, and how would it be different from like something
here, like in terms of timelines and things like that?
Okay, so we'll, one piece at a time. So high level numbers. When I bought the land to begin with, we were looking at some specific models that the general contractor I work with builds, and 1,880 square foot, 3-car garage with a pool was expected to sell right around 500 even, US dollars, of course. The cost to buy the land at that time, I was like 21, 22 grand, maybe 25 on an expensive side. And then the build cost was expected to be around 365. Build costs are over a bit because of some volatility with certain supply chain issues. I think we'll probably be, more like an all-in closer to 400 on that one, maybe 390 or somewhere in there between the land and the build. Still quite good. But in the meantime, so when I bought the land, we were thinking 499. Then there was a time, maybe in February where it was like 599 or more. And now that's come back down to like a 560, 550 expectation for list. So it has come back down, but not nearly, I shouldn't say not nearly as aggressively as here. What I like about it is it was never this crazy explosive market for all the time that it was here in Ontario. In Ontario, things went crazy in most areas starting 2017, maybe even late 2016. And there in Southwest Florida, like in Cape Coral and Fort Myers specifically, they just regained their 2008 highs like about 2 years ago. So a very different market. So I like the idea that we were looking at being all in on something for under 500 grand, 400 grand, still in an affordable price range for something that's pretty spectacular. Like if you think about that kind of build on that space with an 80-foot frontage and a pool, caged in and everything, and an outdoor kitchen, like you're paying like $1 million plus for that kind of thing in Ontario, maybe 1.5. And so immediately those numbers were speaking to me, and people in Southwest Florida are saying, oh, how can things keep getting more expensive? This is unaffordable. I'm like, you haven't seen like Ontario, New York City, like there are a lot of places way more expensive than this. This is actually quite affordable relatively. And my theory is that water flows to the lowest point. So when you have affordable markets, people leave the unaffordable markets and come to the affordable markets. So you pair all that with the in-migration to Florida, because politically it was very attractive. People wanted to come there. They have crazy population growth in Florida from people just leaving other states and coming there. So it's kind of like the perfect storm of factors that I was really happy about. So I know we were talking high level numbers. I think that we're going to see a lot slower decrease in values in Southwest Florida compared to Ontario, just given some of these differences, because there's always competing factors, right? Like Ontario and Canada in general, we have a huge amount of immigration that are going to push back on these price decreases. So interest rates are pushing prices down and immigration's pushing prices up. Yeah. Similar conditions in Southwest Florida. I just think that because we didn't have that long exaggerated increase in price growth, that it's going to be less severe.
Yeah, and somebody was I was speaking with somebody about the way that lending works there, right? Like you've got 25, 30-year mortgages there, locked in, fixed rate. So a lot less people right are affected by the rate increases than sure. It would be over here, because we've got maximum 5-year terms.
Yeah. Well, yeah. Think about the dump of all the people who got their mortgages in 2018 at like 3% or sub 3%, and then they're going into an environment where they're going to renew around like 6.25%. A lot of them are going to be like, oh, I can't afford this. List their house. Now you dump more supply onto the market. Yeah. That's going to push prices down even further, because again, it's all supply and demand. Now it's kind of artificially created challenge, and it will eventually correct back the other way. But who knows? Not to get off track. So your first question was about the high level numbers. I think I went through that. You had another question in terms of what's different about building down there.
Process, like permitting and And I'm assuming these ones are concrete construction, not wood frame, right?
Yeah, it's very uncommon now. Like you can still find it, but it's very uncommon to find stick frame houses in Southwest Florida, or probably in most of Florida, just because of the termites and then obviously hurricane rigidity.
Yeah.
So like big consideration is hurricanes and flooding. So my builds, we actually had to bring in fill to raise the level of them up. So they're actually raised up off of the typical grade for the neighborhood. And so I'm out of the 100-year floodplain. I didn't flood in the hurricane that just happened. We were in the eye of the storm. Like we got hit among the worst. Well, Fort Myers Beach was just directly south of Cape Coral, and they got the worst. Yeah, so that's a big part of it. I mean, you think hurricane ties, like the trusses are all tied down. Like I didn't lose a roof, but I saw other buildings where the whole roof system, including the trusses, was just flipped right off. It was a pretty bad hurricane. So for me, like the damage was like we had a couple of shingles, not blown off, but turned up. Like some of the edges actually got broken and bent back. But from what I saw, we didn't lose our water seal. I did have a couple of pieces of drywall in the one because we didn't even have a door on it. A couple of pieces of drywall just from the pressure on the ceiling just got pushed down, not from water, but from air. So yeah, just getting into the big considerations, you have impact glass, no basements. And so those are some of the construction differences. And then of course your shingles, they're nailed 6 times instead of 3 here in Canada, because you got a lot of wind. And I think, from experience here in Ontario, like I've never seen a trade that has more people who are not capable of doing their job than roofing. Like do it bad. There are probably 20 roofers that won't do it right for every one that will. And I was very relieved to see that this roof held, because I've had properties I've worked on where the roof was installed incorrectly. I had to rip the whole thing off. I had another one where nailed in the wrong spot, a whole sheet of shingles just slid off the roof.
That's crazy.
I've seen it all, man, when it comes to shingles. So I was really happy about that. In terms of time frame, permitting is supposed to be pretty quick down there. Like it's supposed to be a few weeks. It's gotten as bad as a few months. And the actual, for what I'm doing, so survey is about 6 weeks right now. So you get the survey, select the model, they engineer it for about a few weeks, and then they submit it for permit. So that could be a few months there. And then the build is about 7 months. So right now, if I were to buy one and start from scratch, I would be assuming I'm around a 13-month from the day I close to when I'm like ready to sell.
That's
probably expect double the time frame here, if not more. I just completed a build as well. And I think it's been over probably close to 30 months now. And it was just a simple severance and in Hamilton. Yeah.
Well, I will say, like, some of the things that make it easier is that Cape Coral, for those who don't know it, is like, it's just a whole bunch of 80-foot lots everywhere. Like, it's like when this city was formed, they expected the growth to be way bigger than it was at the time. So there's neighborhoods that are just streets that have grass growing through it. Like you almost can't see the asphalt anymore because the street never really got developed. Like there was a road put in, but no one ever actually built on any of the lots. So they didn't repave it. The asphalt started to crumble. So you've got lots and lots and lots and lots of lots. And you can basically just, buy them up, and the price got driven up because everybody knew. And you'll see so much new construction in Cape Coral. It's become the hot spot. And that this is the nice thing is, like, the neighborhoods I'm building in, there are very few houses around. So we're among the first ones. And it's not like you're going to have neighbors all around you right tomorrow. So there's a lot of really nice new construction houses in these neighborhoods with lots of space in between them. And who wants to be right in your neighbor's face? So you're still in the city, but you've got room. And here's what makes the process go quick is, like, I'm working with a general contractor that has her own set models that she builds. She knows her prices in and out. She knows her designs. So if I'm picking within those models, things are going to be quick. It's when you want to customize things. Now, all of a sudden they have to go get tenders, figure out what everything's going to cost, give you a price.
Exactly.
I mean, this is one of those things. Even down there, I was telling people how quick my general contractor was doing it. They're like, "How is that possible?" I'm like, "Well, I'm not inventing any sort of wheel here. We're just rinsing and repeating what's been working." So I pick out my colors, but I mean, the structure, I'm just working off of what she has.
Yeah, no, that's amazing. Yeah. Why do you think there hasn't been, like, when you look at Ontario in contrast, there hasn't, most of the development is done by large development companies, right? Like they're building subdivisions at a time.
Yeah, I've been thinking about that. Like, yeah, why don't we have more of that here? And I think that there's a lot less consistency with available lots. When you do happen to find available lots, they're usually part of a bigger development that was done, and they're 30 feet wide and what have you. But that same model, I think, could work here. If you could consistently pick up the same type of lots and just build models that you already had pre-designed that were, exactly the right width for that zoning. Again, I just think it's the abundance of lots in Cape Coral that caused builders to have this. So you had a whole bunch of these general contractors that just came in and looked at it and said, I can think of a number of models that'll work on these lots. Like with 80 feet by 120, you've got a big lot. You can do a lot of stuff on those lots.
Yeah, and especially at 20,000 a piece, like it's
I wish it was that cheap.
Like
now it's more like 40,
looking at minimum
45.
300 for a lot here, like even
and then you got to service it, and I mean, so some of the other like big benefits is like in Toronto, your development charges are over $100,000 a unit now, right? Yeah. There, my all-in permit development soft, I think is like $12,000.
Yeah, that's insane. So, then, Andrew, why do you think that there aren't more institutional developers in Cape Coral? Like, why is there no, big builders coming in and just tearing it up?
I mean, I think there's a lot of mid-small size. Like, I've spoken with Sherry, who's working for me, and she's in the several hundred a year that they're building. So it's not like they're not doing a lot, and there's a lot just like her that are doing a number. But they seem to be doing it for private clients. I wonder why. That's a great question. There are some larger developments there, but yeah, for the most part, it's just these smaller developers and contractors building their homes. That's a great question. I don't know the answer to that. And
who, like, so your plan is to purchase these and then you're going to sell them on the market. Yeah. Is that what I'm understanding, or do you have another repurposing for them?
Yeah, I mean, the plans, like, I'll always adapt to whatever the market's doing. And if I think it's better to sell, I'll sell, and then I'll buy back later. I mean, I'll just play the game like everybody else does. But ultimately, yeah, I want to do several as short-term rentals, long-term rentals, build up a portfolio of rentals down there. Because I like the price of acquisition. The numbers based on what I think I can do are quite good for like an Airbnb model. But not if you're going to perform like an average performance. And of course, the interest rates have impacted that too. But the second one I started building, my intent was to keep it. So I kind of did it better and bigger, maybe not the highest ROI if I planned to sell it, but, still would do well. So that one's like 2130 square feet, 3-car garage, outdoor kitchen, pool, hot tub overflowing into the pool. And I think I'll be all in with that one around 450. And that one, there was a recent sale in July for 610 for that, but it didn't have the pool, the hot tub, and a couple other things. And it was only a double garage instead of a triple. So I know the market's changing. Who knows, where that goes. But one of the nice things is, like, when you know that your market's going to be a little bit volatile and it might lose, a little bit of value, it's nice to have that kind of margin to start with. So, you've got a decent spread, even if prices adjust.
For sure. I want to kind of switch a little bit in our conversation. You've been a podcast host for 4 years now, and maybe tell us like top 3 things you've learned from or top 3 strategies and also in terms of making money or just investing in general.
Learn from being on the podcast.
Speaking
we've spoken to several hundred people, and there's sometimes you always take a few things from your guests.
Yeah, that's a good question, because it's a hard one to answer, because I'll hear one idea and then I'll hear it again and again and again. It's hard to attribute it to necessarily one place that I heard it, but it's the exposure to these ideas that caused them to kind of cement in my mind. Like, I don't think I would have done most of what I've done if I hadn't started the podcast, because the community I created allowed me to get these ideas and then proceed with them, build the network out. Like, the biggest income earning strategy, I think, is building your network and the number of people that'll take your call.
Yeah,
like the number of people who are worth knowing and worth talking to from an investor standpoint, in a wealth growth standpoint. Sure. I've said this before, but I read in one of Kevin O'Leary's books that the biggest reason for him to be on TV was that, you know, pretty much anybody would take his call. And I thought the exact same thing. I'm like, that's brilliant. You know, I'll just make sure that people know who I am. And yeah, like, so that was a big thing. Just, you know, being able to start the meetup, being able to start the podcast, talk to these people. You know, I've made a lot of good friends, that people who I talk to regularly who are very smart and know how to, you know, how to talk real estate, you know, yourself included. Right. So, top strategies, like I was blown away by the Airbnb arbitrage thing, the different guests I had on. Of course, that's been kind of quashed in Ontario. It's not nearly as popular because all the municipalities are cracking down on it. But a lot of what I saw there inspired me to want to get the campground that we bought, where we run it.
Yeah, that was going to be my follow-up question. Like, how did you get that idea about starting a campground and glamping?
Yeah, tell us about it. It's super cool.
Yeah, so my mother-in-law has cottages in South Bruce Peninsula. So it is a place called Oliphant, just north of Supple Beach. And she was doing on like weekends during like the first year of lockdowns, like she was doing like $1,200 a night on Saturdays. And then the weekdays were like $800 a night. And I was looking at these numbers. I'm like, I would love to own one, but how do you scale that? Right? Like, I don't want to just own one rental and then, you know, you got to go to the bank and all this stuff. Like, I'd love to get into a situation where we could have a property where we could just keep adding units and keep growing the income. And then, you know, I had that conversation openly several times with my brother-in-law, saying, I love the idea of this. I just don't like the idea of, you know, you get into one and you got like 50 grand a year or 100 grand a year. And it's like, now what? Like, I've got it to this point. How do I grow it more? And then he found the campground. He's like, hey, check this out. Look at this campground. And it was in this great spot right between Tobermory and the Grotto, and Lion's Head, like the great hiking spot, you know, just kind of like really centrally located near everything you would want to be near in that region. And so then the idea was, okay, how do we take what we're doing and maybe look at like glamping? Because my wife had shown me all these like different glamping tents, like over the years, like we'd seen like, oh, well, this would be so cool if we stayed here. Look at this tree house. I'm like, stay in a tree house without a toilet. So it was like kind of just funny. Like, it's hard to pin down, like going back to your point, you know, what we were talking about before, it's hard to pin down where the ideas came from, because I would talk to Jordan about things that I learned from my network and people I've interviewed. And then she finds stuff on Pinterest or wherever and shows it to me. And then that's like, that all morphs into us actually doing something and having these conversations. So it's sort of like that law, you become the average of the 5 people you spend the most time with. So just like kind of surround yourself with people with these ideas and they grow. But yeah, it's hard to pin any of this down to one location, one source. We just kind of kept moving with the ideas. I knew that this area is where people wanted to be because I'd been up there. Invest in what you know. I know that area is popular. I know it was really growing in you know, traffic to the area. But when we looked at the camp, like conventional camping in that location, it actually had a lot of strikes against it. I think the glamping model was the only thing that really stuck out to us as like, we can rock and roll with this. Like we could really be trailblazers by basically setting up a full accommodation, camping light. You know, you get a bed, you know, in a tent with furniture, and you know, pay $175, $200 a night plus cleaning fee. And people are like, we had people booked right up to our last day. Our last night to stay is October 14th. Wow. And last weekend we were full on our tents. Every tent was booked. And it's getting cold. Like, people are camping and it's cold. And we thought our trailers would be busy because we have glamping trailers too. The tents, man, like people just want to take photos and Instagram the tents. Like, we get tagged. And we do on our trailers too, but the trailers have heat. The tents don't. Yeah. People still are booking them up. So
yeah, it's a kind of, you provided a very unique experience.
Yeah, that's it, right? It's an experience, and you know, and looking at recession coming, and you know, spending on unnecessary, unnecessary spending is obviously going to get constricted. We actually feel pretty optimistic that we're in a position where people who would have vacationed overseas, like, we're a pretty cheap vacation for a really cool experience. kind of. So I think Ontario tourism actually could be positively affected by a recession, because people who would have gone overseas or would have traveled further might actually just spend that money locally and spend, less, obviously.
Yeah, for sure. So, is it seasonal? Is it only over the summer months that you guys rent, or do the trailers go all year round?
We presently don't have the ability from a operational standpoint to run year round, just because of water lines freezing and things like that. Like, we have to winterize. Bylaw will allow us to run, they say 7 out of 10 months, whatever that means. That's a really weird thing to say. So I worked that out to be like 8 1/3 out of 12 months. We really only operate for say 6 months out of the year. So I think next year we're looking at sort of April 15th to October 15th is our operational window. And, like, you pay appropriately, right? Like, the price of the campground was based on it being seasonal. If it was year round, we would have paid probably double for it.
Yeah. And how many tents do you have on it?
This year we finished up with 7 Airbnb, like, glamping tents. Then we had probably most 6 trailers that were operational. We took 2 of them off our Airbnb just because they weren't quite the caliber that we wanted for our brand. And we're sort of still refining that. We have a few things in the pipe for next year that we're wanting to add. And it's all just coming down to manpower and who can do the work to get things set up. One of the big things that we did sort of, and I don't think that it's necessarily a mistake we made, but we should have foreseen it, is just the late launch. We didn't launch our glamping operation at all until end of June. So we lost a complete run up. No one could have booked before then. So on one hand, it was disappointing. On the other hand, like, we still had some pretty solid performance out of some of these tents. And we're just thinking, wow, what could we do if people could actually book in the winter, book leading up and actually come in, starting in April.
Right.
Like, pretty well no one's going to camp in April, but I guarantee you we'll get glampers. We'll get people who will come and 3 blankets, and they'll camp in our tents.
Yeah,
Nice.
no, that's crazy. Yeah, that's really cool. I've heard a lot about this lately.
Yeah. I wanted to switch the conversation to economics.
Sure.
What are you predicting for the next? I mean, predicting, I don't like that word, but what are you seeing in terms of the market in the short term and I would say medium term, in a 24-month period?
Yeah. So, I mean, the timing of anything is like almost impossible to predict exactly. Like, one thing that I feel very confident in is that we have not seen the bottom. Yes. Although, if you look at month over month growth, and I looked up Hamilton and Toronto, and month over month we're actually up. But that could be a seasonal thing. I haven't really looked, too far into it. We had a steady decline for, I think, 7 months in prices, and then finally 1 month where it actually went up a bit. I got to look into that further. I think that we got, if we have another interest rate hike coming, I think we're going to see more downward pressure on prices just because increased supply. Even if interest rates were to stay the same, it's hard to imagine, if you think about all these mortgage renewals that are going to come up. I heard a stat recently, 50% of Canadians, they're struggling to buy food right now.
Wow.
It's a bad stat. So I think that the effects don't happen all at once. It takes time for foreclosures to happen. Well, it's power sales in Ontario. It takes time for those things to happen. So for the supply is going to get more and more increased as these effects play out, which is going to affect pricing in a downward trajectory. How long that plays out, I don't know. That could be another 6 months. It could be another 5 years. We'll see. I don't think we're going to see like the rapid descent in pricing necessarily if they stop jacking interest rates, but if they keep going, I think it's just going to keep going down and down. I know that's probably not what a lot of people want to hear. Some people are assuming that this is the last interest rate hike we're going to get, this one in October, and it's not going to be a full percent. It might be 0.75 or 0.5. Time will tell.
Yeah.
We just so I have a new YouTube channel we launched, and we just did a market update on this kind of thing. But there's 2 things to consider. So we've got our bond yield that has been going up. We're now, like, our bond yields for like 10-year bonds are the same as they were in 2008. So they've come up quite a bit, and like the banks take a spread on that. So if your bond yield is 4.5, the banks are going to want 200 basis points, so they're going to charge 6.5. And then we've got our overnight lending rate, which is what everybody's talking about, which is, the meeting, whether they're going to increase that. Ultimately, it's all manipulation from the Bank of Canada. They've been doing quantitative tightening, basically selling off bonds to drive up the yield. So the central bank is the one that does all of this. So for us to make any predictions, it's like we need to be able to predict what the people in charge of that institution are going to do, which we know are traditional economics. Like when you're in a recession, which we undebatably are, and you're jacking interest rates, like it's not a good combo. So they've announced that their mandate is to control inflation regardless of the effect. And these are like the same people that were, when everyone's locked down and when you drop interest rates, you can't stimulate an economy that you're forced to close. Yet they do that, like, here, let us give you some free money. Let us do all this. And these are the same people like, I don't care if you can't eat and you lose your job. We're going to control inflation. It's just, it's very odd. And this is why they're so hard to predict. Because that move back at the beginning of the lockdown didn't make sense. These moves, if you want to control inflation, like they changed the way they calculate the inflation. Like if they still calculated it the way we did in like the 80s, we'd show like 15% inflation right now. And I think that's probably more accurate. So, how are you going to control that? In the 80s, bond yields got up to, I could go as far back as I could go. I saw that they were at 12% yields. 12 or 13. So that means that rates were around 15%. Yeah. You imagine us getting to that rate to control inflation now?
I know.
And in our inflation now is equivalent to that. So are they going to go that far? It would be much more devastating to go that far now than it was in the 80s because of the amount of debt people carry and the amount of debt our government has. They have to service that debt too.
So that's what I was wondering myself, that can they keep increasing rates? Because it's getting expensive for the government as well. Right?
Yeah, but they can just tax all of us for that, right? You could just pay more.
But at the same time, I know they have to control inflation, which is their number one agenda right now.
Well, the best way they can do that is to stop spending. Eventually, the effects of the money they've printed will fizzle if they stop doing it, but they're still spending in deficit. So it won't stop it, right? It's just an artificial suppression of demand. It doesn't fix our housing crisis, right? Like if we're immigrating 400,000 people a year, but we only can build 200,000 houses, how is that going to work? And housing starts are down now because developers are weary of where the market's going. We're going to build houses now and they're not going to be worth our cost.
Exactly.
So the effect this is why I believe on the other side of all this, we're going to see housing go to a price that most Canadians cannot afford, like the vast majority. There's going to be the owner class and the renter class at the other side of this. And that could be 5 years out, 10 years out, maybe 2 years out. I don't know, but hope it's not like that. But what other possibility is there? Like when people can't justify building the homes because of the cost. Maybe some people, will say like, supply chain, like it's back. It's actually in much better standing than it was. Maybe prices come down enough on the goods that it makes sense to build again. And maybe the price of labor comes down because again, it's all supply and demand. Like there's framers that are charging $20 a square foot to frame when it was like, I paid $6 a square foot in 2016.
I remember I paid 12.
Yeah, in 12, like I'm still paying less than that, but it goes up and up. And so if some of these things come down, it gets a little cheaper. But again, I just think you look at the affordability and it's been one direction. Like people are less and less able to afford their monthly expenses. I think that it was like a Band-Aid to have really cheap debt for a while. And a lot of people got into houses. They were just barely qualifying. And we had the stress test, but now actual rates are above what the stress test was for all those people who qualified. So they're officially outside of their affordability based on the income that they had when they got their mortgages.
Yeah.
A good thing they had the stress test, because if they didn't, they'd be in worse shape. But like I said, I just think on the other side of this, it's just going to be, you're going to have companies like BlackRock, Blackstone, whatever, buying up residential real estate like they're doing in the States and they've talked about doing here. They're going to buy up a lot of the available inventory. We're going to have way too many people here and it's all supply and demand. So only the people with enough money will be able to buy those houses. And that's the unfortunate look of Canada right now. But that's I'm going to self-censor here because if I say certain things, maybe you get taken off of YouTube. But I don't want to be
Definitely
too
going to be an interesting
controversial.
time.
Yeah.
Next, I would say, 6 to 18 months, maybe longer. Nobody
Yeah.
knows.
Yeah. What are your thoughts on Ontario? Are you completely, sort of planning to exit the market here? And I mean, there's a lot of discussion from investors here that, oh, this is the perfect storm. This is the perfect time to start buying again. So we're hearing that from a lot of our investor community.
Oh, yeah.
What are your thoughts on all that?
Biggest buying opportunity of a lifetime coming up. But
Yeah.
I mean, do you want to own in Ontario? Like, I mean, this
That's
is
the
kind of like
question.
a great opportunity to not own in Ontario. Like one of the least landlord friendly places you could own. Practically a socialist
100%.
province. Inside of a socialist country, it's tough to justify when landlords are waiting a year to get a tenant out right now. And like James Fernandez just posted a story of a house that he finally got the sheriff to remove the tenant, and the backyard looked like a landfill, like an actual landfill, just garbage. Is all you could see was garbage. Why own in a place like that? Like Florida, somebody's not paying. I haven't had to deal with this yet, but I've heard, it's quite quick, like within 15 days. But there's a lot of states that are like that.
Mm-hmm.
And it doesn't mean that stays that way forever, but for now, I mean, there's pushing your business uphill or pushing it downhill. And if I have an opportunity to invest in a place that's going to be more landlord friendly, I'll look there. That doesn't mean that I'm not going to look at Ontario in the next little bit. And if I'm buying stuff for, 50 cents on the dollar or 40 cents on the dollar, I'll probably buy that stuff too. Like you'll just weigh, am I willing to deal with all that, landlord tenant stuff? And I am. Like I'm pretty experienced with it. I tend to get along well with my tenants, and we treat each other with respect, and there's no issue. So, but it's a funny province because there's more and more people that are just going to get out of the game. Like how many people do I know that are going down to Florida, like following my lead, or maybe they just coincidentally,
including us. We're kind of actually selling some of our smaller properties, and more focusing on the US as you mentioned, it's landlord friendly, business friendly, better financing terms. So we're concentrating on that. And how is it for you? So what are what kind of opportunities are you seeing, both here, Ontario, as well as in the US? Like what do you think is some of the better opportunities that are going to come up besides lower prices?
Well, I mean, it's anywhere in that hurricane path. Like there's going to be huge opportunities to buy up any of those properties. Like there's so many houses, like in Fort Myers Beach, there were houses. My mother-in-law had 7 houses, and for sure, only 4 out of the 7 are still there. They're right on the beach. And, but a couple of them are actually like perfectly fine. She said one of them, the beds were still made, little cards on the pillows as their Airbnb. That was all fine. But that one was like literally 20 feet off the ground. Like they're on like basically stilts. Yeah. And for that exact reason, because they knew that this is very possible in that area. So anywhere in that area, like you're going to have people who just, get their insurance payout, wouldn't mind selling. There's going to be a lot of that. So naturally, because of all the supply, you're going to be able to pick up some lots, probably pretty darn cheap, and build them. But contractors are going to be tough for the next little bit because of all the rebuilding. So there's a huge opportunity anywhere in that path for people willing to work through it. But I just think you got to look at states that are seeing a lot of growth, that have a diversity of industry, and have a reason that people would want to go there. For me, like doesn't matter like that the hurricane hit Southwest Florida, like there's still going to be people wanting to go sit in the warm sun. That was I've heard people say 1 in 500 years type of hit for that area. Normally hurricanes come east to west across Florida, northeast to west. So they come from the southeast, they go northwest. And in this particular case, it curled around and came back in, which is very uncommon. They've never been hit with something like that. So big opportunity there, I think, like anywhere affected by those type of things. But I think that a lot of the US is going to see what we're seeing here. They're going to keep seeing a decrease in prices until the Fed turns, does an about face, right? And Canada is likely going to follow the Fed. because we don't want to get too out of whack. So I think opportunities both sides of the border. I don't have specific states. I think like just look in states that you wouldn't mind investing in,
Sure.
and cities you wouldn't mind investing in, and be discerning, because now with more inventory on the market, there's more things being missed. There's properties being overlooked. You have a chance to tie things up and actually negotiate with a seller. You've tied it up. You've tied them up for 10 days, 5 days. Now you come back and say, wow, we discovered this, and this. It's going to cost us this to fix it. What can you do for us on the price? And we'll firm up.
Absolutely.
Those opportunities are going to lead to some really awesome deals for a lot of people. And even though the median price is, whatever it is in Hamilton right now, like 800,000 or 700,000, doesn't mean you can't pick up a property for 4 from somebody who just can't wait and needs to sell now. So those type of opportunities are already here. And I think that's what people need to be on the lookout for if they want to, make the best of an unfortunate situation for just about everybody,
100%.
right?
Yeah, for sure. Yeah, no, that's great. I think we could get you going about so many different things, but
yeah, I know I'm talking way too much. So
no, it's honestly super insightful.
Yeah.
And I think that, a lot of people are extremely, this is something that they want to know about right now. Everybody wants to know. Everybody wants that crystal ball, right? Everybody wants to know.
There's so much fear out there right now that people are kind of almost like, let me just stop and do nothing.
Paralyzed.
Now.
A lot
There's
of people
a lot
are
of stop and
paralyzed
do
right now.
nothing.
Yeah.
Yeah, huge opportunity for people that just sitting on money right now,
Yeah.
like cheap money available from private lending standpoint, because all these people sitting on it that don't want to buy a property now, they're would-be lenders or potential lenders. So hey, that's an opportunity too. If you can find a deal, there's going to be money out there.
Yeah, for
100%.
sure. And I think the big takeaway is that, you got to look and create the deal. Nobody knows when that absolute rock bottom is. So you can certainly wait. And I mean, there is some merit to waiting, I think, and watching and learning. But at the same time, there is not going to be that perfect time. And sometimes when that perfect time comes, it comes and then it goes as quickly as it comes. So there could be a pivot and then things could start to rise very quickly.
I thought a lot about that. I don't know how fast it pivots, but we'll have indicators, right? As soon as they say, okay, we're done raising rates, and then you kind of watch, okay, what's happening over the next couple of months? Like it'll sort of plateau. Okay, now they're done. Is inflation under control? Okay, so reasonably, they're probably going to sit still for a while. Historically, like if you look at the 80s, it took quite a while for interest rates to come back down after they got inflation under wraps. So it would be odd to think that it would be any different now that they're just going to all of a sudden drop rates. So I still do, I wouldn't want to speculate on any value. Now go find deals, and you could even do BRRRRs, but go find deals that you don't really care if the value comes down, like they're making good money, 1% rule, 2% rule. I think those things are going to come back.
For sure. And I think
it was a unicorn for a while.
And the flippers have definitely calmed down. I think all flippers, including ourselves, like now's the time to be very cautious in what you're doing. Because I think that's the only strategy that can be, you're going to lose the most if you make the wrong move.
But you can flip all the way down. You can flip as the market's coming down. Like you just got to buy better numbers on the start. Like you got to say, well, over a year, we might lose 10%. So I need to make sure I'm buying at, 50 cents on current value. And
for sure. If the deals
will still happen. And now that, the wholesalers, I think there's a lot less demand for I think wholesalers are less motivated right now because they know there's so many people that are weary. So the amount of people going after properties right now is so diminished that it's a huge opportunity to buy.
Yeah.
And, every single challenge has a, silver lining.
That's right.
I think that's what people got to stay focused on.
Yeah. No, I think that those are great last thoughts. I mean, there's always something there. There's always an opportunity to be had.
Yeah, for sure.
Yeah. Well, thanks again, Andrew, for your time. If people want to get in touch, we'll put in our show notes as well. What's the best way for them to reach out? Your podcast, you have a YouTube channel as well.
Yeah. The easiest place for now anyway is just Instagram at the Andrew Hines. And I try and do a good job of getting back to people who message me. Not perfect, but I do my best there. And then, follow me on any of the platforms, wherever you listen to podcasts or watch them. Just search my name, Andrew Hines, or Andrew Hines in real estate on any of the platforms. You'll find it.
Yeah.
Okay.
Yeah. And feel, check out the Andrew Hines podcast as well. It's a very, very highly rated podcast. Been running for 4+ years now. So definitely great insight.
Lots of good content. Yeah.
And that podcast.
Thank you.
So yeah,